Hey, hello friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to the daily market analysis show Markets Tomorrow, where we look at what happened in the market during the day and plan for a better trade for the next day. Right? So what kind of market we had today? It was a bounce up green day, right? But will it sustain? That's the question. Let's look at the charts and see what they say, right? So as usual, this pre-market analysis for the April 27 Wednesday tomorrow 2022 would be based on all these parameters that you see on the screen, left and right? So you will also have some wrap up and actionables also. Let's see what happened today. So this is a chart here. So we had a gap up, right? It's a pro gap that is formed, right? We had a bearish gap down yesterday. Today it's a bullish gap up, right? Pro gap up. In the same can be seen on the Banknifty also. So this, this location where yesterday. Where the market had made a low seems to be a support zone, right? So which is also a previous resistance zone. So when a price takes a support at a previous resistance zone and bounces up, it's a change in polarity bounce. Right? It can be very effective most of the time, right? So that is what has happened on the Nifty and the Banknifty, both the indices today. So right. So probably if it further moves down, we can say that no, it has made another swing low which is higher than the previous lower swing, and then no, so that could be indication of further up move. But as of now, it's clearly consolidation. We'll see that, right? So let's get to the numbers. How much we lost and got gain. So Nifty bounced up actually 247 points gain, 1.46%, right? It's a bullish pro gap. It's above 17k, actually 17,200 above. And it closed above the 50 DMA. One of the DMA is taken back, but still below the 20 and 200 DMAs, right? So which is kind of slight bearish indication still continue to be there. Right? But the price action, you can see it is a breakout, flat breakout that happened, and then a trend line channel breakout happened, and then it fall back to the same place. That's where we are. But now it is again bouncing back and then further moving up, right? That's what you see here, right? So we had a flat breakout, it bounced up, big moves, and it could not sustain much, and then retraced little longer, little long, but not too bad. Again it bounced up, didn't sustain, again fall down, and then again bounced up, right? That's exactly. So very high volatile moments is what you see in Nifty and Bank Nifty all the same, right? Big breakout, retracement, equally good percentage of retracement has happened, and then bounced up but couldn't sustain again, like so it's the same thing happened in Magnitude also. So one of the DMAs of 50 DMAs retrieved by both indices, but 2200 DMA is still above and it has to be gone before we can say anything further, right? So that's it. Bank Nifty gained 322 points, right? It closed below the opening, so it's a red, but it's a pro gap. It's gapped up. 8-9, nearly 1% move only happened. Not big moves did not happen as expected because it made the move and then retraced a little bit, right? So still 20 DMA and 200 DMA is above. Trend line channel breakout is there. Also we have seen that. But intraday, if you see, it's a 0.8% of gap up that happened on both indices, Nifty and the Bank Nifty today. This is intraday candle. So gap up happened and then consolidation happened. And looked very volatile. One shape V, second V, third inverted V, another V, and another. Further one more inverted V and V. So it's highly volatile price movement is what has happened. But again, the Bank Nifty that it could not sustain the gap up and then move further up, right? It was trending down actually, very highly volatile, trending down in 300 point range. But Bank Nifty, it was gap up of 0.8% and then trending in 100 point range, and then last 15 minutes it made a big bullish move. Final half an hour of trading, right? That's what happened in price action. So Bollinger Bands is saying it's pure consolidation as of now. Both bands have contracted, and then there's a bearish bias is there because it's still below the 20-day bias. So, as long as it's not coming above that, there's no bullish bias. But yeah, so bearishness, biased, consolidation, highly volatile consolidation is what you see here. That's what Bollinger Bands is saying. Let's look at support resistance levels. You can see that the immediate support would be 17,000, 7,050 levels. If that breaks, it goes to 16,800, 16,900, which is 938. If that goes, it goes to 16,700, 16,750, 16,550, 16,650 after that, and then 16,250 to 16,450, which is also a gap. And that's a Fibonacci 50 retracement also. Resistance and upside would be 17,200, 7,300. First be taken out and then taken out concretely, right? And then above that 13,350, 400, 17,350 and 17,400, then 17,500, 7,600, which is the Fibonacci 23 also. Above that 17,800, 850 level, then above that 18,000 rounding number level. That's resistance on the upside and supports on the downside. Bank Nifty similarly, we have a support at 35,600, 35,900 levels, and then 35, then it is like 35,800 levels, 300, 800. So it's not clear very much. I'm just once again, no, for some reason the screenshot isn't working. So let me quickly go through that. So immediate resistance would be 36,300, 36,800, which is Fibonacci 38, and above that you have 37,000 level, and then about 37,500 Fibonacci 23 level, then 37,700, 37,800, then 38,000. These are the resistance on the upside. And you have a resistance of a gap that is there near to the 37,000. So clearing above this at 37,500 is very crucial for the further up. Downside similarly supports will be at 36,000 nearby levels, and below that you have 35,000 nearby levels, which is Fibonacci 50, and then below that you have 34,750 levels, and then 34,000 levels, Fibonacci 60 retracement level also, which is crucial, which is having all the gap support also on the just above that, right? This 34,000 has to be closely watched, and then 37,500, and then 39,400. That's the resistances on the upside that you keep a watch, and 34,000 is what you have to watch on the downside, right? So let's get back to the slides once again. So make a note of all these levels, right? So Bank Nifty 17,500 is very crucial to close, and then above that 18,350 levels. Downside 16,400. Looking at the momentum divergences and all that, we are in the sideways momentum on both the indices. Medium term also it's sideways, short term also sideways, right? So that's what is happening. Trend indicator radius is saying it's DMA negative zone itself on both short term and medium term. So it's bearish trend with weak strength and flat strength on medium term and short term. That's what is happening, right? That's trend and momentum, and now volatility. It could a cool off of 10% happened today. It's 19.8, but very close to 20 still. So you have to be cautious naturally, right? But it's below 20. That much you can say. That much relief, right? 77.6 is the implied volatility percentile for the Nifty. 90.15 is implied volatility for Nifty. So 20 above, stay away from trade is what we can do. Open interest analysis is saying there is unwinding. The expiry is day after tomorrow. So some unwinding of the call positions, that means it's good. Some unwinding of call position again in the Bank Nifty also, which says that people are bullish. Put call ratio is near to bullish for the Nifty, 0.90. Put call ratio 7.3 is also closer to bullishness, but not at there. And short covering is what the futures open interest is showing, which is clear bullish. People are going long who are short earlier. Long build is what happened in the future open interest data. Option interest levels. Option open interest data is saying that 17,000 and 17,500 is the range for day after tomorrow's expiry is going to be. 16,400 and 17,200 is the next level of highest put and call, which is the bottom resistances. 36,500 and 36,500 is where the maximum put and call rating is there. So a lot of straddles are written at that point. 36,500. Keep a close watch on that. That's why the highest put rating and call rating both are there. 36,000 and 37,000 is the next range where the second level of highest put and call rating is there, right? PCR and futures open interest that we have seen. So overall it's a bullishness that is reflecting in the options open interest data and the futures open interest data also, right? Both just 2 days ahead of expiry, right? Look at this green today, Reliance, which was showing very much red the other day, has bounced back. Right? Also, almost all the major heavyweights were doing good. HDFC and ICICI, which performed yesterday, did not do that great, but it's still green. Right? Almost all the sectors except healthcare all performed. Now index heavyweights, if you see, HDFC is a green close, just trying to climb the sideways momentum. Right? After the big fall, consolidating at a support zone. HDFC also fallen off from the major support zone and then at another support zone and trying to move up the green close. Almost climbed to the sideways zone from the bearish zone of the momentum. Reliance green day another after a big retracement that happened, still in the bullish zones, and it may have taken support at the RSI 60 and then further bouncing up. Infi still in the momentum is in the bearish zones, right? And it is a big fall and a lot of a big gap is formed, and then it may find a lot of time to clear out that gap and move about that, right? So stay away from infy is all you can do. Overall IT sector itself is having some issues, and here TCS is hanging on the sideways, not getting the bearish rounds and the edge of a channel, which it could fall down below because that's a major support zone out there. Right now it is not a major support zone, but it's on the edge of a parallel channel. It could fall down and then take support here and then it rebounds up, possible. But it is not ready to stay in the bearish zones, it's in the sideways zones. ICICI Bank is showing some issues in the last 3-4 days of training after the results have come in. Volumes are good, but it is not able to climb back with the increased momentum for some reason, right? So we'll have to wait before it consolidates and takes the energy for further climbing up. Kodak Bank is trying to consolidate. It's in this sideways zone. It is at a major support zone, so no worries there. It may be not moving up, but consolidating for sure. So overall, Reliance and ICICI is what is closer to bullishness. Others are all sideways or bearish, right? So that's about heavyweights. Industrial sector-wise performance, if you see, it was overall green day, and IT moved flat but up. Metal moved up, right, and 1.3%. Auto moved 2.8, nearly 3% up. 1.1% pharma, FMCG 2% up. Realty 3.5%. So almost all the sectors except IT moved up today, but IT is only a sector that's in bearish zones on both the indices. Stay away from IT. All other sectors are sideways. Auto is bullish in the short term. So auto, you may take the bet with tight stop losses because weekly momentum is not caught up yet. But metal slipped from the bullish zones, right? So all are in sideways most except auto in the short term, right? That's what sectors are saying. Institutional participation today, another sell-off. Yesterday 3,000, day before yesterday 2,000. Last week we had 6,000, 5,000 crores of selling in the cash that happened from Fyers. Comparatively today is less, only 1,200 crores of selling has happened, but Fyers DAs are buying equal amount today. That's why the rest of the job was done by the retailers. So that's why we had a green trade. The selling did not happen that much from the FIs, but selling continues is a worry point. Dollar is slightly strengthened today. Slightly weakened today on the USD-INR. Right? USD-INR is showing that the rupee has strengthened slightly, but it is still at a very high level, above 76, and 76 plus 96.5 kind of level. So he said very close to all-time high level. Rupee is weakened so bad. Look at dollar index that is shooting up like anything, and then again going to hit the 103 next resistance level. Right? It's with steady momentum, and then clear bullishness is happening in the dollar index. Right? So rupee weakening and dollar rising like anything. That's the scenario. Not that great. Dow Jones had bearish days yesterday. Also, it's a green on Dow Jones, but it's not following the bearish on yet. Probably consolidating at the very good support area that we have. We have to keep a close watch whether it will break down from this place or not. That is the only thing that you have to watch. Same with the Nasdaq also, bearish day. Bearishness is what the last candle is saying. Momentum also is slipped in the bearish zones, unlike the Dow. So Nasdaq and S&P 500 both the momentum that is resisting below the RSI is 40. And price almost slipping down from the support zone. It's very close to slipping down. Dow for some reason is on the edge of slipping into the bearish zones. Right? So bearishness in the US market is a worry. You have to keep a close watch. Our markets can't stay green forever. If the US markets are falling drastically. So if it is consolidating, it may be fine. But if it is falling or crashing like anything, then obviously our markets also crash. If it is consolidating, we have a scope for a up move or the price catching up. Crude oil is again pricing back to the 90 levels. It's a green up move that has happened today, but momentum slipped to the sideways and it has fallen off below the 100, which is a good thing. Gold has failed second time to move further up, and then seems to be consolidating with support zones and not ready to fold nor ready to go up. Overall, it's sideways, trying to hold on to sideways momentum is what we see. Right? It's on the edge of flipping into the various zones also. So yeah, so momentum is very bad turned bad for the gold after a 2 attempt to break out. Adani Ports is an actionable, could give potential swings, trades, because it is kind of weekly breakout of a flat pattern is probably what is happening, and it's a major resistance zone and it is close above that. Seems to be an all-time high also. So momentum is good, trend is good, price is breaking out of a weekly pattern breakout, so it could give good upside for swing trades, right? Client interest also is after the trend is again climbing back and making all-time high levels. So momentum has taken a support and then it's bouncing from the RSI 60. So trend is good, volumes are good, price pattern, cup and handle breakout, retracement already happened. Now further performance can be expected, can give long swing trades on both Adani Port and Reliance. Wrap up is it's mild bearish still and a neutral. A neutral view with a mild bearish bias is what you can say. That's based on the chart patterns, support resistance levels, momentum, trend indicators, and the Bollinger Bands sideways movement and all that considered. Right? So we had very good up move, but could not sustain that, fall down, retrace more than that is enough, and then now it's again bouncing. I've fallen back to the trend line channel, and then we'll have to close watch whether it's able to come down or whether it's going to break down further. We have to keep a close watch. Right? It's a sideways movement, so we never know when it is going to move further up. The only thing that we can look at is if it is above the 20 moving average, it may be a consolidation on the upper side. Otherwise, it's consolidation on the downside. So as of now, we are below the 20 moving average, so you never know, right? So US markets are jittery, and then the resistance is there. Fyers are selling aggressively without any kindness. Crude is still very close to 100 levels. Rupee is weakening like anything. Uncertainty of global things are still there. War is still happening. US Fed hike news, global cues around that is bad, right? So volatility is still there. Anytime it can spike like yesterday and then go up to the 25 level. So even now, the last several days, if you see, the volatility is very huge. It's very difficult to trade intraday because of huge volatility, reverse V-shape, multiple during the days. What is happening, right? So either stay away if it is spiking above 20, or trade cautiously, trade with hedge positions, right? Always overnight positions has to be hedged with risk-to-find strategies, delta neutral or calendar spreads or vertical spreads, right? So keep cautious about VIX further rising above the 20. Right? That's what we can do. All we can do is manage the risk, right? Put stop loss and manage the risk and position size less when market volatility is more, right? That's all that we can do basically, right? We cannot fight the markets and then use our skills to fight the markets. That never happens. So all we can do is stop loss, nothing else. So right, so that's a view. Mild bearish, biased neutral view is what I have for the next day. And I hope it helps you to frame your own view also based on all this study that we have done on the price, momentum, trend, volatility, and all of this. That should also give you a clue on what trade plan I can make for the next. If it helped in any way, definitely consider hitting the like button and then share to maximum. Subscribe if you're not subscribed. Right? We have very few subscriptions and appreciate your help in this regard. Thanks for watching. Happy trading, happy learning. Bye.